Welcome back, guys. Today I'm going to talk about the new transaction tax that has been pitched during yesterday's hearing on Congress about GameStop. If you guys are concerned about how this is going to affect you as a retail investor or how this might hurt hedge funds and larger institutions, today I'm going to answer that with Professor Meatball. If you guys like the work that either of us do, make sure to slam that like button so that Meatball gets a treat and we can start blasting off to the moon. Grab your moon shoes. Let us start talking about it. This is straight from Bloomberg. It is an article titled "Wall Street Transaction Tax Gets Fresh Look After GameStop Furor," or fervor. What is furor? Some Democrats in Washington are seizing on the recent frenetic trading in GameStop core to push the financial transaction tax long favored by progressives, setting up a battle with Wall Street firms that bitterly oppose the idea. And if you guys watched the 8.5-hour live stream, you would know none of the suits, the 4 out of the 6 people that were against GameStop were for this idea. After a House hearing Thursday to examine the GameStop issue, Representative Maxine Waters, the California Democrat that chairs the committee, said that she isn't considering such a tax, which came up several times during testimony. Water. Investment firms and stock exchanges are lining up lobbyists and public relations firms in hopes of stopping the tax, which could decrease trading activity and lower earnings. They see it as harmful to the average American trying to save for retirement. Now let's see if it's true. Robinhood Markets Inc., whose popular commission-free trading app helped ignite the stock frenzy this month, registered its first in-house lobbyists and said the proposed tax is one of the issues they will tackle. At Thursday's Financial Services Committee hearing, Robinhood Chief Executive Officer Vlad Tenev said that the tax would be a bad idea, but wasn't given a chance to explain why. Or perhaps he was given many chances, but he wasn't good at answering questions, which is a compilation video I think you guys are going to love coming out later today. It's personally my favorite compilation video, and I need some suggestions on how to title it. It's just a compilation of Vlad refusing to answer questions, but appreciating and thanking so many times for the opportunity to answer the question that he does not want to. Exacting a tiny sum from every securities trade is a concept that liberal Democrats, including Senators Elizabeth Warren and Bernie Sanders, have pushed for years. They see it as a way to curb the kind of speculative betting that led to last month's chaotic swings in the market and to fund Democratic priorities such as increased public works spending. Oh boy. A financial transaction tax hasn't garnered support from some top Democrats, including Senate Majority Leader Chuck Schumer of New York, who has been wary to back an idea targeting a key industry in his state. To become law, bills that include a financial transaction tax would likely need united support from Democratic lawmakers, making the effort an uphill climb. The tax failed to gain steam a decade ago because of uncertainty over how it would affect the returns of retail investors and markets recovering from the financial crisis. Wall Street lobbyists and Republican lawmakers also opposed the idea, often pointing out that some European countries that imposed transaction taxes later withdrew them. The tax mostly failed to raise the amounts proponents promised. It also drove securities tradings and jobs to other countries. Efforts to adopt a EU-wide levy also floundered. Wow, this person does not know how to spell. Though some European Union member countries are again floating the tax as a way to raise funds to bolster economies hit by the pandemic. One measure now gaining traction by Oregon Democrat Peter DeFazio proposes a levy on trading firms of 10 cents for every $100 of securities traded, though other proposals have gone as low as 5 cents and as high as 50 cents. And that would be crazy. That would be 50 cents for every $100 of securities traded. In January, South Carolina Representative James Clyburn, the number 3 Democrat in the House, threw his support behind the tax. Clyburn noted that the DeFazio proposal was projected to raise $700 billion over 10 years, money that could be used to fund spending on job creation initiatives and health care. If you guys are against taxes, this does mean that it will start to tax you somewhere between 5 cents per $100 or 50 cents per $100 of securities traded. The speculation that we've seen in the market, not just around GameStop, but in all the casino that is Wall Street, has raised the attention, said Susan Harley, a lobbyist and managing director of the Congress Watch Division of Public Citizen, a progressive advocacy organization. Those dollars are very attractive. Waters said that she hasn't come to a conclusion on whether to support a transactions tax. I'm very interested, and I do think it portends possibilities for revenue that may be desperately needed, she said. As a candidate in 2019, President Joe Biden expressed support for the tax, but he never released a detailed proposal. The White House didn't respond to a request for comment. During Thursday's hearing, Michigan Democrat Rashida Tlaib, well, how do I pronounce her name? Sparred with Citadel founder Ken Griffin over the tax, which she framed as a way to address inequality. She called it one way to ensure that this enormous wealth generated on Wall Street actually reaches the real economy. Griffin argued that it will injure Americans hoping to save for retirement. A financial transaction tax would eat into the returns of Citadel, which operates both a hedge fund and a market maker that would be dinged every time they make a trade. Investment funds and firms that trade the most, such as high-frequency traders, could face the highest costs. Now you understand those of the people that were paneling during the hearing are the most at risk of facing the highest costs. Public Citizen and other groups are circulating a letter in support of DeFazio's bill. The levy is an important step toward having Wall Street pay its fair share of taxes, says the letter, whose signatories so far include the Liberal Economic Policy Institute and unions such as the AFL-CIO and International Brotherhood of Teamsters, those truck drivers. In addition to efforts in Congress, lawmakers in New York, New Jersey, and Illinois have proposed local taxes on financial transactions. In response, exchanges such as the New York Stock Exchange and market makers including Virtue Financial Inc. have threatened to move operations out of the states to avoid the tax. A national tax would undercut those threats. Wall Street firms are girding for battle. Investment giants and trade groups, including Vanguard Group, the Securities Industry and Financial Markets Association, and the Investment Company Institute, said they're lobbying on the issue. So you guys are seeing history in the making if this becomes an actual tax they want to implement. Financial transaction taxes at the federal or state level unfairly target America's mom and pop investors and working families saving for retirement, says Chris Iacovella, as chief executive of the American Securities Association, a trade association for regional financial services firms. The U.S. had a stock transactions tax between 1914 and 1965. Did you know historically that already existed? Today, a small fee is still levied against stock transactions that help fund oversight by the Securities and Exchange Commission. A group of nonprofits in the UK in 2010 organized to support a financial transaction tax, even dubbing it the Robin Hood tax. Oh boy, that has a bad connotation now, with the idea that it would take from the rich and give to the less fortunate. It caught on in the U.S. as Democratic lawmakers proposed their own bills, which never moved forward once Republicans regained control of the House in 2010. A financial transaction tax also took the stage during the 2020 Democratic primaries as a candidate. Vermont Senator Sanders, who now helms the Senate Budget Committee, proposed a levy on all trades as a way to finance his plan for tuition-free college. Finally, Michael Bloomberg, the founder and majority owner of Bloomberg LP, the parent company of Bloomberg News, also offered a version during his presidential primary effort. This is Bloomberg News that we're reading right now with all these typos, so of course he has to give a little shout out to himself. At the time, lobbyists circulated research by Vanguard that claimed a measure similar to DeFazio's would reduce investor returns by more than 1 percentage point per year. Vanguard came under fire for its assumptions, such as basing its calculation on the high turnover rate of an actively managed small cap stock fund. The company later released estimates for more typical types of mutual funds and said in many cases the tax would hurt returns by less than 0.3 percentage points. Vanguard spokesman Charles Kurtz said a broad financial transaction tax would do unintended damage to everyday families saving for retirement or higher education. One advocacy group, the Partnership to Protect Our Retirement Future, planted paid consultants at candidates' town hall style meetings to frame the tax concept as an affront to retirees. So you can see that there's already money behind this, trying to sway the thoughts one way or another. Right now, it seems like the money is behind not having the tax. Obviously, they stand a lot more to lose if the tax is implemented. North Carolina Representative Patrick McHenry, the lead Republican on the House Financial Services Committee, in October introduced his own bill, the Protecting Retirement Savers and Everyday Investors Act. It would prohibit states from imposing taxes on transactions. And we got to hear him speak yesterday as well. Well, the final question returns to you guys. What do you think that this transaction tax will do to everyday investors? And what do you think it will do to the institutions that all of us love raging against? The institutions that brought us to the brink of disaster, and now they are going to be the most at risk of losing a ton of money. And the fact that they have already started to lobby against this with paid protesters who go to these hearings and pretend like to be regular people, that seems a little shady to me. But honestly, one of the analogies that were given during the hearing yesterday was that other countries have tried this. America has historically tried this, and it doesn't seem like it hurts regular people that much. Of course, I'm not going to try to be political. You guys tell me what you want in the comments down below. And for now, but not for forever, make sure that you have subscribed, make sure that you have hit that like button, and I will see you guys in the next video. Thank you guys so much. Peace.